Understanding market trends. Successful traders often emphasize the importance of identifying and understanding market trends. This means recognizing whether the market is in an uptrend, downtrend, or sideways movement and adjusting strategies accordingly. Risk management. Effective risk management is crucial. This includes setting stop-loss orders to limit potential losses and using position sizing to ensure that no single trade can significantly impact your overall portfolio. Technical analysis. Many trading books stress the value of technical analysis, which involves studying price charts and using indicators to make informed trading decisions. Common tools include moving averages, relative strength index, RSI, and candlestick patterns. Fundamental analysis. Understanding the underlying financial health of a company through fundamental analysis can provide insights into its long-term potential. This involves analyzing financial statements, earnings reports, and economic conditions. Trading psychology. The mental aspect of trading is often highlighted. This includes managing emotions like fear and greed, staying disciplined, and sticking to a well-defined trading plan. Developing a trading plan. A well-structured trading plan outlines your trading strategy, risk tolerance, goals, and methods for evaluating trades. Having a plan helps maintain consistency and avoids impulsive decisions. Continuous learning and adaptation. The stock market is constantly evolving, so continuous learning and adaptation are essential. This includes staying updated on market news, learning new strategies, and reviewing and refining your trading approach based on past performance.